Hello, everybody, and hello, Digital Davos. We're live now. I'd like to welcome Charlie Shrem and Ben Tsai. There's a couple more guests working with our tech team to get on to the Zoom conference. This is a very exciting panel, Digital Davos, this side conference broadcast in Davos, Los Angeles, and around the world, actually started to focus on crypto and applications of blockchain. So these crypto panels are some of the most popular. This specific topic is in a lot of interest for asset managers, is whether the bear market will be extended or it will be ending soon. So I'll let our two guests that are on now introduce themselves. Ben, do you want to start it off?
Yeah, sure. Hi, my name is Benjamin Tsai. I'm a co-founder and president of Wave Financial. We're an SEC registered investment advisor based in Los Angeles. So I think that's probably a quick start.
Sure. Charlie?
Hey guys, I'm Charlie Shrem. I've been around the Bitcoin and crypto space for over 10 years. I had one of the first Bitcoin exchanges back in 2011 for 2 years and had founded the Bitcoin Foundation with a bunch of other people. And over the past years, been involved in many projects, getting involved in many startups and bringing some companies public. At the same time, I also host my own podcast called The Charlie Shrem Show, powered by Untold Stories, and run the Crypto Investor Network for MarketWise.
Great. Yeah. I guess my first question, both of you are tapped in to a lot of startups, as you both said, as asset managers. I'm curious what you both are seeing as the most innovative tech in this current bear market to invest in, right? Where is the building really occurring, and what will be the new DeFi that we saw this last bull market in the coming bull market?
I guess I'll jump in and start. From my perspective, we're continuing to invest in DeFi. We really believe that that's an area that's continuing to develop. We're starting to see applications of DeFi as it connects to more traditional, kind of the traditional finance space, and I find that very exciting. I think getting more applications, more ways of using crypto connected to more of the traditional, the mainstream finance is a way for us to potentially come out of this crypto winter and being able to build some of these platforms. Really, I find it extremely interesting.
Do you see that as in tokenizing physical assets or putting things like equities on chain? Where do you really, or lending protocols?
Sure. I see more success more immediately on the lending protocol side. I feel like that's a more immediate application. That's something that people are definitely interested in. The applications of stablecoins as it connects to that is very exciting to me. Separate from that, I do know of quite a number of, tokenization projects, and I think that there are some longer term potential to that, but I think that's still probably in its early days. The investor base for that, I think, is still a bit small, which limits its the liquidity benefits that I think we're all hoping for.
I want to get back to this idea of stable coins, but Charlie, what do you see as the next innovative technology to take over in the next bull run?
Absolutely. Actually, the same things really. We're going to see a huge amount of different, during the last bear market, we didn't really know even where to categorize. If we were to have the same question, back then as you would have now, we wouldn't even be able to say which categories specifically were the ones that were most successful, because we didn't really look back and have a post-mortem until the bear market.
Right.
Now that we've had time to kind of look back at that, it's kind of hard to figure out, hey, what's going to be the next? Is it going to be DeFi? Is it going to be this? It's going to be that. I think if we take a step back and if we're building out products and services and we're investing, and that's where all the investment money is going, in products and services that use crypto and bring something amazing to the whole world that all of us are going to use, and not just build out crypto products for crypto people. That time has kind of passed, and now we're using this technology and building out for everyone else. So if you ask if you were to take everything and categorize them, and right now, because we're still in the weird area of the bear market, the bull market, and crypto specifically. We're seeing days where everyone's all bearish at 16,000, and then we go to Bitcoin goes to 21,000, everyone's bullish. We're not out of the bear market yet. We're in these like weird period of disillusionment days where no one knows is the bull market is the bear market. However, now's the time I feel like where we can actually be looking at the projects to invest in now for the future. So stable coins for the masses, it's going to be huge. Security tokens, I really believe that scaling decentralized applications in DeFi is going to be huge on other types of blockchains. Casino and gaming is going to be already, we're seeing during the bear market, gaming NFTs, creator and fan tokens. Sam, some of the things that you've worked on too, that's going to be huge. People building out the whole gaming industry as well. Tokenized securities and bonds, tokenized US treasuries. These are going to be products right now. People say, oh, I want to go buy a 30-year treasury. Shit, have you ever tried to use treasurydirect.gov? It's almost impossible to use. And then you're paying your brokers to get you treasuries and things like that. So tokenized assets that can be on-chain asset managers, real estate finance. I mean, there's just so much being built right now. There's so much coming at us.
Yeah. Yeah, I saw a deck this morning somebody sent me, and they compared the daily active users of Bitcoin to that of Candy Crush, and Candy Crush is over 200 times larger, right? So I like what you're talking about, you know, building this infrastructure for everyday people, for mass adoption to happen. Really, these technologies need to pass the grandma test, right? My grandma isn't able to use it, then we're really not going to see, you know, this mass adoption. But to get back to this idea of stable coins, you know, a lot of these efficiencies come from the decentralized nature, right? There's no middleman bank taking the majority of the profits inside a lending protocol and so forth. However, the onboarding process still requires a lot of trust, right? For the past essentially since it's been created, there's been rumors that Tether isn't fully backed by its assets, right? We saw Luna collapse. So my question is, what do you see as the future of stable coins to sort of create a trust-free nature? Because as there is that fiat to crypto, crypto to fiat on-ramp, it seems like there has to be some trust in there, or historically there's needed to be some trust. So
sure. Yeah, I'll jump in there and try to answer that a bit. Charlie, please feel free to jump in with your comments. I think we're at a very interesting point in the stablecoin side. I think stablecoin in kind of a fiat-backed version, which is a little more centralized, is something that most people are now comfortable using. They understand it. It's really a matter of, you know, is there a dollar backing the dollar? Is there 50 cents backing the dollar? Are there enough assets? How we prove those assets is kind of fundamentally that question that we're tackling. And I think that's something that is achievable through traditional means, really kind of the Web 2.5 version of that. Yeah. I think the issue comes really from our interest and not necessarily the success of creating algorithmic stablecoins, which are more linked to other crypto as opposed to fiat back. And that's been a struggle. And that's something that certainly, you know, the Terra network falling apart has really set that whole space back quite a bit. The other part of this discussion really is on the regulatory side. We believe that this year, you know, U.S. regulations will come out to start managing how stablecoins could be defined, how they could be used, and how they could connect with the more traditional financial ecosystem. And from that perspective, that will impact how things are looked at. My understanding is that the regulations are leaning towards fiat backed and, you know, really leaning away from algorithmic backed. So I think, you know, the potential of having algorithmic backed stablecoins actually, unfortunately, probably moving further away, really set back by the fiasco that was Terra.
Yeah.
We need comments on that. Oh, sorry. I was saying we need regulations.
We need regulation. You think it won't stifle growth?
Not in the stablecoin sector. I mean, for that sector to succeed, that you need to be regulated. There's no way around it. If there's no regulations in stablecoins, especially in the US, then you might as well, that whole sector should just kind of like pause. You can't do stablecoins without regulations.
Yeah. Yeah. Now, do you worry about CBDCs coming in? Essentially aren't crypto, right? They're completely centralized. CBDCs coming in and regulation saying there can be no private stable coins by any means. How do you think that would affect the crypto industry?
I feel like, I've spent a lot of time thinking about that. And if we're ever in a world where most governments are using these like central bank digital currencies, for me, I look at it as like, hey, thanks to the governments for onboarding all these millions of people into crypto now.
Yeah. And we just had Michael Turpin join. Glad you were able to make it. I'll ask you this.
Some technical difficulties, but we're in now.
Yeah. Yeah. Zoom conference is a new technology.
No, it's not new, but some of the new aspects of loading it in from different Google sources. At any rate, I'm here.
Well, I appreciate you coming as one of the original marketers of Ethereum. I'll ask you the same question I asked Charlie and Ben when they came on. What do you see as the next innovative tech being built in this bear market that will, dominate the crypto industry in the next bull run?
Well, I think there's probably going to be 3 or 4 that come in the next 4-year cycle. If you look back 4 years, when everybody said crypto is dead in 2019, that was when really based on Ethereum for the most part, NFTs, the metaverse, and DeFi came out. The DeFi summer, of course, and the explosion in NFTs. Now, of course, everybody thinks all 3 of those are dead, and they're not. They will go and have their second wave of growth, particularly DeFi. I think that you're going to find some CeFi, DeFi hybrids. Anything that can kind of get transparency plus accountability. That's sort of been the problem with CeFi and DeFi right now. And some of the DeFi, you don't have transparency with anonymous founders and the occasional rug pull, et cetera. And with CeFi, you have all the games that Wall Street plays that have ended up with some of these catastrophic CeFi collapses that, the regulators like to call DeFi, but Celsius was not DeFi. FTX was not DeFi. These are 3 Arrows was not DeFi. These are all individuals regulated, typically offshore regulated companies. I would say that, in my opinion, some of the next big innovations, I think we're going to have an explosion of the next layer of Dexes because, there's so little trust right now in, kind of the exchange world, and people literally right after FTX pulled a couple of, it was a huge amount of dollars off of the exchange. I can't remember the exact number, but it was a lot. It was in the billions, and within a week. And so, there's, Uniswap now is bigger than Coinbase, and you're looking at the next generation of Dexes that are going to either be a combination of some KYC regulation with Dexes. I've got a portfolio company that's developing something along those lines, as well as sort of the next level of having the ability to do DEX-like activity outside of in a multi-chain environment, outside of just Ethereum, and to have it where it doesn't have to be a balancing act, and you can actually just have things executing through code. I think that's going to be a big one.
Yeah. Yeah. To combine what you were saying and what Charlie was saying, there needs to be a user-friendly, retail-friendly DEX, right? Because the majority of people choose centralized exchanges because of the ease of use, resetting their password, not having to install MetaMask. But now that risk has gone up, there's almost no option for that.
But crypto needs its crypto needs its Spotify moment. The reason why so many people, were breaking the law 20 years ago and going to Napster to get free music was because there was no easy alternative to pay $10 a month. As soon as Spotify came along, why bother going and risking, getting takedown orders from from government authorities to save $10 a month, right? And in fact, you even have a free option to listen to ads. And so Spotify all of a sudden became a gigantic company by solving that problem in a legal, compliant way. And crypto and easy to use. Everybody uses it. I mean, you can't even remember a time there wasn't Spotify. And so crypto needs its Spotify moment.
Yeah. No, that's great. I want to talk about Bitcoin specifically and the future of Bitcoin. We had Ethereum merge and move over to proof of stake. And as ESG becomes more popular, people are concerned with energy usage. I guess my real question is the halving going to lead to the next bull market? Right. We had the last bull market, the last halving. A lot of people said it was priced in. And we like to think this stock to flow model will lead the Bitcoin price continually. But there's lots of opinions that this bull market is very different, or this bear market is very different. So I wonder if any of you have opinions on whether the halving will have any weight into leading the next bull run.
Yes.
You think so?
Charlie answered first.
The Bitcoin price needs to be double what it was at the previous halving, in my opinion, for every halving. Kind of the way to, especially in the first 20 years of Bitcoin's existence, we'll probably see continuous cycles like we've been seeing. It's only been 13 years or so, not even really the Bitcoin's real trading life is less than 10 years old. So we're going to see, I think, many more of these cycles. How long they go, how high they go, no one knows. But like Michael was alluding to, a lot of liquidity in Bitcoin has just been taken away. They've been taken off exchanges. We're seeing Bitcoin on exchanges is at an all-time low. And wherever Bitcoin fits into the larger crypto landscape, it's kind of funny. A lot of it walk around and say oh, what's it like being a Bitcoiner living in a crypto world? We can still follow the pillars that Bitcoin gave us, like hard, sound money and being able to have the ability to have an equal level playing field for every single person. And I think in the future, there's going to be a huge value to have a hyper secure chain that's secured by energy, because proof of stake has its benefits and things like that. And we don't need to get into this conversation now. Proof of work has its also amazing benefits at the same time.
Mainly security, but I would say, first of all, you do have a thing called diminishing returns over time, but we are not at the all-time high of forever for Bitcoin yet. You basically had, when there were very few people using Bitcoin, and there was not that much out there. It was even more highly speculative than it is today. And your highs and lows in a cycle, your first cycle before the first halving, before it was just theoretical that the halving would even happen, went from a tenth of a penny at its low and $30 at its high. I mean, that's, is that 300,000x? I mean, if you bought at the low and sold at the high, and you'd be going, woohoo, I got a $30. Well, everybody loved that $30 Bitcoin today. Then it went back down to $1. The first halving, and I sort of look at numbers like halving to high, low point to high, things like that. Halving to high, the first cycle, the halving was at $12 in November of 2012. And a year later, it was 1,200. So it was 100x from halving to all-time high in 12 months. And then it crashed down because it was, you typically have, FOMO in both directions. You have people racing to get in after it's already priced probably too high, and you have people racing to get out after it's already crashed. You've certainly seen that in the last month, and Jim Cramer's on TV saying it's not too late to sell all your crypto. Please, I beg you, sell your crypto. And it rallied 25% after he said that. Do the exact opposite that he says, I think, for the most part in crypto. But the second halving was 30x, went from 600 to 18,000. I thought on that cycle the third one would be 10x. But we had a war, and we had the Fed and a lot of other things, so it only ended up being about 8x. It went from 8,000 and change to 69,000. So on that kind of cycle, this next time we should probably be 3 or 4x what the halving price is. And the halving price, interestingly enough, if you're a chartist, They talk about fair market value of Bitcoin. So in other words, if you look at the number of people using it over time, that means that since it's a fixed amount, the price over time should go up as long as the number of people using it is going up.
Yeah.
Last I checked, the number of people using it this year is higher than the number of people last year. And we're still nowhere near mainstream adoption. And there's hyper adoption in a lot of the third world. So we're maybe at like 7 or 8% of the global adoption. And when you get to 80%, like I think you will in 20 years, there'll be a lot less Bitcoin, coming in every halving. So this is the first halving where your stock to flow ratio goes below gold. And we're right now, kind of priced on the low end of the spectrum. So most of the analysis say that the fair market value actually hits almost exactly during the halving. And then it goes too high afterwards, and it goes too low after it peaks. And by that analysis, we should be around 35,000 at the next halving. Yeah. And we're barely at 21 now. So, and I agree with Charlie. We'll probably be at 3-4x at that. I think we'll hit 100,000 this time. If not, it obviously depends on external factors. If we have wars, we might crash at 80 or something. But if it's a good economy recovery and there's a lot of other things in the third world adoption going on, we'll probably be over 100. Yeah, and it'll crash.
Yeah, of course. It's a beautiful graph where they overlay the users of the internet and the users of Bitcoin, and they track almost exactly. And we're just a couple decades behind on that adoption curve. Ben, I'm curious from your perspective, you came from traditional finance originally. Do you think the macroeconomic factors could potentially wash out any effects from the scarcity produced from the halving?
Yeah, I think there are a number of factors that are there. I'm in general agreement with Charlie and Michael. I'm actually looking forward to kind of Bitcoin prices rising from where we're at right now. I think most factors point more upward than downward. And there's certainly, just looking at pure adoption, there's certainly more adoption than less. In terms of regulations, when regulations kick in, I think there actually is going to be more adoption from the institutional side because they get comfortable with a better safety net, better comfort in terms of infrastructure. So from a macro perspective, I'm also very supportive there. I think the unknown and the part that where all of us aren't quite able to capture is the momentum of people's sentiments and coming in and going out, and that's always very tricky. It's also driven by quite a number of other factors. As the adoption goes up, the correlation with traditional markets also increase. We've certainly seen that in the past few years where as Bitcoin becomes more mainstream, it's being traded along with, for example, some of the tech stocks and so forth, where there's a bigger and bigger overlap of investors there. And from that perspective, it may be impacted by some of the other macro factors that would impact the equity markets, such as continued rising rates and so forth. My concern right now is that, with the Fed signaling that the rate rises are going to slow down a bit, the markets are rising quite a bit, and that's not what the Fed wants to see. So there could be negative surprises and them wanting to raise rates a little more to temper the enthusiasm we're seeing in the markets just in general, and also specifically with crypto. I actually don't think they see the crypto market as a major indicator in either way. I think they're more really looking at equity and fixed income markets. But due to that higher correlation, as I mentioned, that there will be that impact.
And it's important to remember too that the next all-time high, if it follows trend, is typically a year or so after the halving. And our next halving is in May of 2024. It's been pushed back because of the miners that were going offline, particularly during when China shut down. Originally, it was scheduled for February or March. So that means that your next all-time high, if it stays to the cycle trend, this is not exact, but been pretty close. I mean, in terms of like where we've been, we've always so far hit our all-time high in November, December of the year after the halving, and we've always hit the all-time low within a few weeks of January. If it turns out that the all-time low ended up being 15.5 in December of the year prior to the halving. And so this should be a flat year, up a little bit at the end. And then historically, it's always gone 50% increase, pretty predictably, leading up to the halving. So if the halving is going to be, mid 30s, maybe as high as 40, it means we should probably be high 20s by, November of this year. But it's important to remember that when the all-time high period takes place, which will be roughly, mid 2025, we will have a new president, or we will have a second Biden term. And so there's a lot of things that could be, different in terms of, I don't think the Republicans are going to go and, let Powell just dictate, policy. Certainly, if Trump was getting a second term, he'd fire him the first day in office. So I think that there's a lot of unpredictables that we don't know in terms of the next presidency.
Yeah, thank you. Yeah, we have to wrap up here really quick. Just as a quick take, we turn the new year. Michael gave his forecast of, crypto as a market in 2023. Ben and Charlie, just in a couple seconds, what would be your forecast for this new year?
Just a quick one on my side. I'm actually a little more excited about the international markets. A lot of us in crypto, we all work very globally. I'm seeing a lot of excitement coming out of Asia. I just spent a few weeks in Japan. They're actually talking about deregulation. So I have high hopes for, the markets like Japan and Singapore really, picking up the slack and going back to rebuilding again. I think the US is going to be a little bit more muted. It'll really depend on, how the regulations come out.
Yeah. Very interesting. Charlie?
Yeah, I completely agree. It's going to be I think regulations may be something that will solve itself a lot faster than we think. It could be something that could be like the potential.
Oh. Charlie, you're cutting out a little bit there. And you're going to leave us with a cliffhanger. Thank you all for attending.
A Black Swan event that put much money. Can you guys hear me?
You're cutting out a little, Charlie.
Did I lose you guys?
Yeah.
It's Los Angeles internet.
Having a rainy day. Okay. Yeah. Thank you all for attending.
Thank you.
Thank you.